Hey everyone, and welcome back for another deep dive. Today we'll be looking at AMI Organics and their performance in Q2 of fiscal year 2025, pulling from both their recent earnings call and presentation.
It'll be great to dig into this company a bit. They're really known for their work with advanced pharmaceutical intermediates and specialty chemicals, and I think it's a fascinating story of how they're handling the current complex global landscape.
Well, let's jump right into it. The first thing that jumps out at me is their revenue growth, a massive 43.2% year-on-year increase, bringing them to 246.7 crore for the quarter. That's blowing past their own projections.
Right, and it's especially impressive when you consider everything going on around the world. Geopolitical instability, longer delivery times, pricier freight, and of course the constant pricing pressure coming from China. It's really a tough environment out there.
So how are they managing to pull this off? What's the secret?
Well, I think a big part of it is their strategic focus. They've been really leaning into CDMO contracts and also focusing on products for chronic diseases. These are both areas that tend to be less vulnerable to the ups and downs of the market.
So it's all about playing the long game and focusing on that steady demand.
Exactly. And you know what? The market seems to agree. They've even upped their revenue growth guidance for the whole fiscal year to 30%. That's up from their original projection of 25%.
That's quite a jump. Shows they have some serious confidence. But beyond revenue, what about profitability?
That's where it gets even more interesting, because they're not just growing, they're also becoming more profitable. Their gross profit for the quarter was a considerable 107.2 crore. That's a 51.5% surge compared to last year.
Wow, that's impressive. It seems their strategy is paying off in more ways than one, bringing in more money and keeping more of it.
That's right. Now, for those who aren't super familiar with financial jargon, gross profit is what you have left after you subtract the cost of making and selling your products from your revenue. So it's a really good way to measure how efficiently a company is running its core business.
Makes sense.
And in AMI Organics' case, their gross margin, which is that gross profit as a percentage of their revenue, hit 43.4%.
Okay, so if their gross margin is higher, they're basically keeping a bigger slice of every rupee they bring in.
Exactly. And even more impressive is their EBITDA, or earnings before interest, taxes, depreciation, and amortization. This tells you how profitable their operations are.
Okay.
And that number practically doubled this quarter compared to last year. It reached 48.9 crore, with an EBITDA margin of 19.8%.
So their EBITDA margin basically shows how much profit they're making from their operations before you factor in all the complicated financial stuff.
Precisely. It really shows they're getting more efficient and squeezing more profit out of what they do.
Yeah, that's a good sign. Now let's move on to PAT, profit after tax. The bottom line.
Yes, the net profit. What's left after all expenses are paid. This quarter, it was a solid 37.6 crore, more than double last year.
Wow. So they're growing revenue, expanding margins, and their net profit is surging too.
Yeah.
Sounds like they're doing everything right.
It certainly seems that way. Now let's take a closer look at how their different business segments are performing, starting with pharmaceutical intermediates.
All right, let's dive in. This is where things get really interesting.
Absolutely. This segment saw a very impressive 53% year-on-year growth. And this was fueled by two main things. One, strong performance in some of their key molecules, and two, their CDMO business is growing faster than anyone expected.
So those long-term contracts are really starting to pay off.
They are. And it's also worth noting that they're strategically choosing to focus on intermediates for chronic therapies, things like medications for cancer, depression, seizures, and cardiovascular disease.
I see. Those are all essential treatments that'll always be in demand.
Exactly. That makes them less susceptible to economic ups and downs.
So they're tapping into a market with built-in stability. That's smart. But how about their specialty chemicals segment? How's that doing?
That's where things get a little bit more complex. Overall, they saw a more modest growth of 7.6% year-on-year, and that's mainly because of one of their subsidiaries, Baba Fine Chemicals. They operate in the semiconductor chemical space.
Oh, so not all smooth sailing there. What's happening with Baba Fine Chemicals?
Well, the semiconductor industry as a whole is going through a bit of a downturn right now, and unfortunately that's affecting Baba's sales.
I see. So the global chip shortage we heard so much about is kind of over now, and there's not as much demand for the chemicals that go into making those chips.
Exactly. But here's the interesting thing. AMI Organics isn't just sitting around waiting for the market to improve. They're actively searching for new markets for Baba's products, especially in Korea and Japan, two of the biggest players in the semiconductor industry.
So they're diversifying. That's a proactive approach for sure. But even with the challenges at Baba Fine Chemicals, Is the rest of their specialty chemicals business performing well?
It is. If you take Baba Fine Chemicals out of the equation, the rest of the segment actually grew by a healthy 25%. So it seems like their core product portfolio in this area is doing quite well.
That's good to hear. It seems like they're handling the ups and downs of the market really well. Now,
Mhm.
what about their plans for the future? I know they mentioned capacity expansion.
Yes, they're putting a lot of resources into expanding their production capacity. One of their main projects is a new facility in Enkelschwar, specifically for advanced pharmaceutical intermediates. It's almost finished, and it'll have a capacity of 442 kiloliters.
442 kiloliters. That's a massive increase in their production potential. But are they going to be able to use all of that right away?
Not quite. Right now, the whole Enkelschwar facility is running at about 20% capacity, but they expect to reach full utilization within the next 3 years.
That's a bold move, building all that capacity based on future demand.
It is, but it also shows just how confident they are in their growth.
Absolutely. This expansion is a big part of their long-term strategy, right?
It is. It'll allow them to take on bigger and more complex CDMO contracts, which we know is a major focus for them.
So they're not just aiming for higher revenue. They want to become a major player in the CDMO space.
Makes sense. Now, what about their move into battery chemicals? I remember that being mentioned as a potential growth area.
Yes, they're making some interesting moves there, especially with electrolyte additives. These are vital components in lithium-ion batteries, which are used in everything from electric vehicles to smartphones.
So they're getting in on the electric vehicle revolution.
Exactly. And they've already signed contracts with several big EV and battery manufacturers. But they're being cautious, especially with the Indian EV market, which is still a bit uncertain.
So a measured approach. Smart move when you're entering a new market. Overall, it sounds like they have a very bright future ahead of them.
They do. Now let's shift gears for a moment and talk about their market share, their pricing strategy, and how they manage their order book.
Okay, so now we're getting into the details of their competitive landscape. Right. Well, Ami Organics is already a leader in several key molecules, especially those used in chronic therapy medications. And this gives them some leverage when it comes to pricing.
So they're not as affected by price pressure as some of their competitors might be.
Exactly. They also have a very healthy order book, which means they have a steady stream of confirmed orders, enough to support their ambitious growth targets.
So they're not just relying on hopes and dreams. They have actual orders lined up. But what about their order book execution timeframe? How long does it take them to actually fulfill those orders?
Typically, they can execute orders within a few months, which shows they have really efficient production processes and supply chains. That's really important in today's fast-paced market.
It is impressive. It sounds like they're really firing on all cylinders, from their strategic focus to their operational efficiency. But let's zoom out a bit and talk about the big picture. What's the overall outlook for the specialty chemicals industry?
Well, it's a bit of a mixed bag, to be honest. The industry as a whole is facing some headwinds, particularly oversupply and pricing pressure from China.
Ah, yes. China is always a factor to consider.
It is. But the good news for Ami Organics is that demand for pharmaceutical intermediates, especially for chronic therapies, remains very strong. This creates a favorable environment for their core business.
So they're in the right place at the right time.
Exactly. And on top of that, they recently hit a major milestone. They passed an inspection by the Japanese Pharmaceutical and Medical Device Agency, the PMDA.
Okay, I'm not familiar with the PMDA. What does that mean in civil terms?
Well, the PMDA is basically Japan's version of the FDA here in the US. They have very strict standards. So passing their inspection is a big deal. It means Ami Organics meets the highest global standards for quality and safety. And that opens doors to the Japanese market.
Wow, so it's a seal of approval from a global authority? That's a huge win for them.
It is. And even with all the challenges in the industry, Ami Organics is still confident they can reach their 30% growth target for FY25. They have a strong order book, a growing CDMO pipeline, and they're expanding into new markets like battery chemicals.
That's great to hear. Now, before we wrap up this part of our deep dive into Ami Organics, I know they had their Q1 FY25 earnings call a little while ago. Is there anything important from that call that we should touch on?
There are actually a few interesting points from that call that help us understand their strategy and performance even better. First off, they were very open about the challenges facing the global chemical industry. They acknowledged the geopolitical instability, the longer delivery times, and the constant pressure from China.
So they're not sugarcoating anything. They're being upfront about the difficulties.
Exactly. And they even specifically talked about the competition from China. They know that China's massive production scale has a big impact on some parts of the chemical industry.
It's something they can't ignore. So how are they planning to compete with such a huge force?
Well, they emphasize the resilience of specialty players like themselves, especially those that focus on technology-driven processes and niche products. They're not trying to win on price alone. They're focusing on areas where they have a technological advantage and where they can offer specialized solutions that meet specific customer needs.
So they're playing to their strengths,
Yeah,
differentiating themselves through innovation and expertise.
exactly. And they also gave some valuable insights into the specific industries they serve. For example, in the pharmaceutical sector, they acknowledged that the advanced pharmaceutical intermediate industry is facing challenges due to oversupply from China,
Right.
but they pointed out that their own products are less affected by this because of their focus on chronic medications.
So that focus on chronic therapies is shielding them from some of the pricing pressures.
Exactly. They said that in this specific segment, technology and process are more important than scale, which plays to their strengths.
Right. They're not trying to be the biggest. They're trying to be the best.
Exactly. They also highlighted the strong growth they were seeing in their CDMO business, globally and for Ami Organics specifically. They mentioned lots of inquiries for new projects and ongoing talks with multiple customers, and a few contracts that are close to being finalized.
So they're really gaining momentum in that area.
They are. And then in the commodity chemical segment, they acknowledged that there was still pricing pressure, even though things had stabilized a bit.
So they're not pretending everything is perfect.
Right. But they emphasize their ability to withstand that pressure through operational improvements and better asset utilization.
So they're finding ways to stay profitable even when the market is tough.
Exactly. Then there were some updates on the Ankleshwar project. They confirmed that they're on track to finish the remaining 2 blocks of the facility by the end of Q2 of FY25.
Good to hear that everything is going according to plan.
It is. They also talked about their commitment to sustainability and mentioned a new 16-megawatt solar captive power plant project.
16 megawatts. That's a serious investment in renewable energy.
It is. They expect it to cover most of their energy needs at the Ankleshwar facility, which will reduce their carbon emissions and lower their energy costs.
That's a win-win. It's great to see a company taking concrete steps to be more sustainable. When is this project expected to be finished?
They said by the end of Q2 of FY25, and they expect to start seeing energy savings from Q3 of FY25.
So they're already reaping the benefits of that investment.
And they also gave an update on the electrolyte additives project, confirming that it's still on track for completion by the end of the financial year.
It's exciting to see them branching out into these new areas, but let's get back to the numbers for a second. What were their actual financial results for Q1 of FY25?
Okay, so their revenue from operations for that quarter was 176.7 crore.
A little lower than their Q2 revenue, but still good. What was the year-on-year growth rate?
It was a 16.6% increase compared to the same quarter last year. So they were still growing at a solid pace.
And what was driving that growth?
Primarily, the strong performance in their advanced pharma intermediate segment.
So their core business was doing the heavy lifting.
Yes, it was.
That makes sense based on what we've seen in their Q2 results. Now, what about their profitability in Q1? Were they able to maintain their margins?
Well, their gross profit for Q1 was 74.3 crore.
Okay, so lower than Q2, but did it still increase compared to last year?
Yes, it did. It was a 1% increase compared to Q1 of the previous year.
Not a huge increase, but still positive. And what about their gross margin?
For Q1 of FY25, it was 42.1%, up from 40% in Q4 of FY24, but down from 47.9% in Q1 of FY24.
So up and down. What explains that drop compared to the same quarter last year?
They said it was mainly because of a strategic decision they made to support some of their clients who were facing pricing pressure. They chose to supply some products at spot pricing to protect their sales volumes and keep those client relationships strong.
So they put partnerships and market share ahead of short-term profit.
Exactly. And they said that raw material prices had started to stabilize, and they were starting to go back to their old pricing formula with most of their long-term customers.
So it seems like that strategy of supporting their clients is starting to pay off. Now, what about their EBITDA in Q1?
Their EBITDA for Q1 of FY25 was 29.5 crore, which was a 13.2% decrease year on year.
So a more noticeable decline in profitability. What caused that?
A few things. The lower gross margin, higher employee costs because of salary increases and new hires for the Ankleshore plant, and the fact that Q1 is usually their slowest quarter in terms of revenue.
Makes sense. It sounds like they're handling it well. What about their paid for Q1?
It was 19.7 crore compared to 30.9 crore in Q1 of FY24.
That's a pretty big drop. Why is that?
They said it was because of the lower EBITDA margin, higher depreciation costs due to the Ankleshore unit, and increased finance costs.
So some of that is because of their investments in growth.
Right. And they did say they expect depreciation costs to be higher in the coming quarters, but they also expect finance costs to drop significantly because they've been paying down debt.
So it sounds like things will improve on the profitability front.
Yes, they should.
And even with those Q1 challenges, they're still on track to meet their growth target for the year, which was 25% right.
Yes. And they're confident about maintaining good EBITDA margins throughout the year.
So they're still projecting strong performance for the full fiscal year.
They are. Now, I think it's worth taking a look at some of the key takeaways from the Q&A sessions of both earnings calls. These conversations with analysts and investors often give us a deeper understanding of their strategy and outlook.
Good idea. What were some of the main themes or takeaways from those Q&A sessions?
Well, one of the biggest themes was the importance of long-term relationships with customers, both in pharmaceuticals and specialty chemicals. They really stressed building strong partnerships instead of just chasing one-off deals.
That makes a lot of sense. Building trust and loyalty is crucial in those industries.
It is. They highlighted their history of working closely with innovators, their preferred supplier status for certain key molecules, and their ability to cross-sell new molecules to existing clients.
So they're using those relationships to grow their business.
Exactly. And they also talked about how committed they are to meeting strict client requirements. This has brought them new business from both existing and new clients who are looking for a reliable partner.
So they're building a reputation for quality and reliability.
They are. Another key insight was their focus on operational efficiency and cost management.
Which is super important in a tough market. What are they doing to improve efficiency and manage costs?
Well, they talked about their efforts to streamline operations, reduce waste, and optimize their supply chain. They're constantly looking for ways to do more with less.
And that becomes even more important as they grow and expand their production capacity.
Absolutely. They also talked about sourcing raw materials domestically, which reduces their reliance on imports and helps protect them from fluctuating shipping costs.
So they're building a more resilient supply chain.
Exactly. They also talked about capacity utilization and their goal of reaching 85% utilization in all their facilities within the next few years.
That's ambitious, especially considering the Ankleshore facility is only at 20% capacity right now. How do they plan to achieve that?
They believe they can do it through a combination of organic growth in their existing businesses, new product launches, and strategic partnerships.
So a multi-pronged approach.
Yes. They also addressed some questions about Bobafine Chemicals. They acknowledged the challenges, but said they're optimistic about a turnaround in FY26.
So they're not giving up on that business.
Not at all. They're diversifying their customer base, exploring new markets, and even working on new applications for their existing technologies.
Sounds like they're adapting well.
They are. And lastly, they gave some more updates on their electrolyte additives project, confirming it's still on track for completion by the end of the year. And they emphasized that they already have contracts with some major players in the EV and battery industry.
So they're in a good position to take advantage of the growing demand for electric vehicle batteries?
They are.
Wow, it sounds like they have a lot of exciting things in the works.
They do.
Now that we've covered all of that, what do you think are the most important things we've learned about AMI Organics?
What really stands out to me is their ability to balance ambition with caution. They're not afraid to set big goals and go after them. They're entering new markets, expanding their production, and investing in new technologies.
They have a clear vision for the future.
They do.
But they're not being reckless. They're strategic, thoughtful, and they're managing their finances well.
They're not jumping at every opportunity. They know their strengths and the markets where they can really succeed.
And that shows in their focus on chronic therapies and CDMO contracts.
Right.
They're playing the long game.
And it's working. They're consistently delivering strong financial results, expanding their market presence, and building a reputation as a reliable and innovative partner.
They're definitely a company to watch.
Absolutely. If you're interested in learning more, I encourage you to check out their financials, read their investor presentations, and follow their progress.
It's a great example of a company that's navigating a complex and ever-changing industry. And they're doing it with ambition, innovation, and a smart strategy.
That's a great way to put it. They're doing a great job.
And it leads right into our last thought for today's deep dive. What's the big question that our listeners should be thinking about as they keep learning about Ami Organics and the specialty chemicals industry?
That's a good one. I think what's really fascinating is how Ami Organics is handling the battery chemicals market. We talked about how they're investing in electrolyte additives. Those are essential for lithium-ion batteries, which are used in EVs and so many other things. But they're also being careful, especially with all the uncertainty in the EV market right now, especially in India.
So, will their bet on battery chemicals pay off?
Exactly. Global demand for batteries is definitely exploding, driven by the shift to electric vehicles and the need for renewable energy storage. But the EV market is still in its early stages, especially in India. There are questions about charging infrastructure, whether people will actually buy EVs, and even whether current battery technologies will be the ones that win out in the long run.
So it's a high-risk, high-reward situation.
It is, and that's what makes what Ami Organics is doing so interesting. They're not just jumping in head first, they're being smart about it. They're assessing the market, making deals with established companies, and scaling up their operations gradually.
It's a calculated risk, which seems to be their style overall.
It does. So to our listeners who are interested in this company, keep an eye on how they do in the battery chemicals market. It'll be interesting to see how it all plays out.
It's a story that's still unfolding, with all the elements of a good business thriller: innovation, competition, risky moves, and the potential to really change the future of an industry.
Exactly. And with that, we'll wrap up our deep dive into the world of Ami Organics. We hope you learned something new and that we sparked your interest in this amazing company and in the specialty chemicals sector overall.
If you want to learn more, be sure to check out the resources in the show notes and keep researching. The specialty chemicals industry is full of exciting innovations, and Ami Organics is a great example of a company that's pushing the boundaries.
They are, and as always, we want to hear from you. Let us know what you thought of this episode, what surprised you, what questions do you still have.
Leave your thoughts in the comments, and let's keep this conversation going. Thanks for joining us on this deep dive. Until next time, happy investing and happy learning.
Absolutely.
Yeah, it's really impressive how they're going about their growth, not just chasing the latest trends, but really strategically placing themselves in markets where their expertise can shine through, where they can build something sustainable. It's a good lesson for everyone thinking about growing a business, balancing ambition with a solid plan and execution.
Absolutely. They're not just reacting to the market, they're anticipating what's coming next, making big moves to grab those opportunities, but always managing the risks too.
Exactly. And that brings us to our final thought for this deep dive. The big question for our listeners, as they continue exploring Ami Organics and the whole world of specialty chemicals.
I think what I find most interesting is how Ami Organics is tackling the battery chemicals market. We talked about their investments in electrolyte additives, crucial for those lithium-ion batteries, used in electric vehicles and just about everything else these days. But they're being very careful, especially with all the unknowns surrounding EVs, particularly in India.
So the question is, will their bet on battery chemicals pay off?
That's the big one. Global demand for batteries is skyrocketing, no doubt about that. Electric vehicles, renewable energy storage, it's all pushing demand up. But the EV market itself is still developing, especially in India. We still have questions about charging infrastructure, whether people will actually switch to EVs, and even what battery technologies will win out in the long run.
So it's a high-stakes game.
It is. Huge potential rewards, but also big risks. And that's what makes Ami Organics' approach so fascinating. They're not just blindly jumping in, they're carefully studying the market, making deals with strong players, and scaling their operations gradually.
A calculated risk seems to be their signature move.
It does. So if you're interested in this company, watch what they do in the battery chemicals market. It's going to be a fascinating story to follow.
A story that's still being written, with all the excitement of a business thriller. Innovation, competition, risky moves, and the potential to shape the future of an entire industry.
It is. Well, on that note, we'll wrap up our deep dive into the world of Ami Organics. Hopefully this episode gave you some new insights and maybe even sparked your interest in this amazing company and the specialty chemical sector as a whole.
If you want to learn more, be sure to check out the resources in the show notes. Do your own research. The specialty chemicals industry is full of exciting innovations, and Ami Organics is a fantastic example of a company that's leading the way. As always, We'd love to hear your thoughts, your reactions to this episode, any questions you still have, any insights you have about AMI Organics or the specialty chemicals industry.
Share them in the comments below.
Let's keep the conversation going. Thanks for joining us for this deep dive. Until next time, happy investing and happy learning.
Absolutely.